What is going on today, YouTube? Today we are going to talk about different kinds of patterns traders use and how they do not always work. And this is why, if you're going to trade, you better cut your losses quick and you better capitalize on your gains. This is just all the stuff that they do not tell you that I have come to realize over the years of watching this. I'm talking about all the bigger traders out there. I just want you to make you realize, like, when they are showing you things, and all these lines on here that every trading platform has, they can really play tricks on your eyes. And they can really make you believe something that's not there. This is why all the traders out there, like I say in all my videos, they are going to make 1 or 2% per trade, and that is their goal. Their goal is not to lose money, cut losses before 2%, or even some traders cut losses at 2%. And go for 4 or 5% gains in a single trade. But I want to point out this pattern today, especially, that I guarantee a lot of traders, if they were watching UGAZ, DGAZ, they've been the hottest ETFs lately, they would have identified this pattern, and yes, they could have gotten in and out perfectly and made some money. But I just want you to realize your chances of that. Okay, so the market opens. This thing opens about 65.22. Price really doesn't matter because we're going to show you all. I'm going to show you all the percentages throughout this matter. But anyways, price opens. It opens around 65.54. Okay, we're going to say 65.50 just to make it easy. I'm going to get as close to that as I can. So I got to 65.51. As soon as the market opens, within 23 minutes, this thing goes down 4.5%. Okay. So we got the low identified right there. Now, obviously, anyone can see that's a low, and it went back up. Okay, it goes back up, it comes back down. Right there is an indicator for a trader watching this stock. It goes up, it comes down, it makes a higher low. Got it. Check 1. Check 2. It goes up, it makes a higher high. So any trader out there is watching this right now, and they will draw a line. They'll draw a line to try to replicate and guess where the next bottom is. No, this will never be perfect, but we'll zoom in. So now it is trending. You can see here, higher low, higher low. So what are they expecting right now? As soon as this hits this bottom right here, it's going to go back up and it's going to keep going and make a higher high, right? Yeah. And especially, it comes down perfectly on this middle line right here, on the VWAP. Perfectly on the VWAP, it comes down and hits it and it's ready to go again. Makes trader even more excited. But guess what? It didn't. It started going on a downtrend right after that. Started its downtrend here. You can identify that pretty easily too. And it's making lower highs. You can identify that right there. Trending perfectly. So, right here, where a trader could have made his money. If he was just going, he or she were just going straight off of these higher lows, drew that line, they could have bought in here when it was riding this purple line, bought in, sold for, guess what, 2% gain. That's all they're looking to make, 2% right there. Now, if you were the lucky one that got in and out within that 2-minute span, so you had to be perfectly watching, paying attention, identify that pattern, and get in and out that quick. Most likely they did not because they thought it was going to make a new higher high. So they're waiting for it to go up to maybe make a 5% gain. But guess what? It didn't. It went up 2% and then fell, and then it went on a downtrend. So now, what I'm trying to point out, so how long are you going to hold on? If you keep on holding on, think it's going to keep on, okay, it comes up again, you're going to hold on, then what, you're going to cut your losses at 3%? Well, you just lost 3% for that day, right? That's easy. It's the easiest way to explain it right there. You lost that 3%. So how long are you willing to hold that position before you're like, you know what, I messed up. It was a bad position. I got to cut my losses. So right there, you could have lost for the day. We'll zoom back out. And then you're going to say to yourself, wow, I got out at the absolute worst time. I got out at the absolute bottom for the rest of the day because then for the rest of the day on, all it did is go up. Yeah, you're correct. But this is where it comes back to timing. How in the world were you supposed to know it was only going to go down for another we'll see what that is, about an hour? How do you know it was only going to go down for an hour, stop right there, and go up the rest of the day? If you were that strong-willed or that risk-tolerant, yeah, you could have made great. You could have made out 8% if you held on. If you held on and sold perfectly, you could have made 13, 14%. But what are the chances of that? Yeah, this could have went down another 13 or 14% too. Then what are you doing? Just gonna hold on forever until your whole position size is gone? No. But what, like, when these people are timing the market, it just shows how unpredictable it is. Within the first market opens at 9:30 Eastern Standard Time. So within from 9:30 to 10:30, we'll say 9:30 to 10:45, you identified an uptrend. From 10:45 to 11:45, you identified a downtrend. From 11:45 on, it did nothing but go up. How can you perfectly time that? That's why I'm saying it's all about risk reward. That's why any trader out there, they cut their losses and they get lucky sometimes. They identify a pattern and it actually works. What if you identify this pattern and it actually does go up? But they're only selling at 3, 4, 5%. They're not holding on to these things all day long. They cash out when they make a profit. And they cut their losses when they're wrong. This is the stuff that you don't see, that they don't show you. And all the brokerages out there, like TD Ameritrade, E-Trade, all that, they make these lines and they make you believe. They have it down to a science because they make money every time you make a trade. Every time you make a trade, they get a commission off of it. So they make money the more you trade. The more you trade, the more you lose money. But they have it down to a science where they actually, this is all based on their statistics. Who knows who does it, how they do it, where they come up with it, but they're pretty good at it. They can really make you believe it's trending between here and here, it's on a downtrend. It's trending between here and here, it's an uptrend. All they do is make money off of how much you trade. So if they can make this stuff right 90% of the time, like it bounces on this purple line perfectly, bounces on this perfect line, bounces on this tan line perfectly, it really makes you believe this stuff is true, and you can just easily time it and easily make a good trade every time. And I've said in many, many, many other videos, if it was that easy, someone would have made a software by now that would perfectly be like, okay, it bounces off this middle purple VWAP line, it's time to buy. But that doesn't happen, doesn't work. So that's it for the video. I just want to show over the first about 2 hours of the market opening how this ETF today had two completely different trends within the first 2 hours, and how hard it would have been to perfectly get the gains or cut the losses in this particular ETF. And this is what happens day in and day out, and how actively you had to be watching to get in perfectly, get out perfectly. If you have any questions, leave a comment below. If you like this video, taught you something, showed you traps that people fall into all the time, leave a like on the video. And if you like this kind of content, subscribe to my channel. And I will see you in the next video.